Hello and welcome viewers, I'm Nirmal. Let's quickly understand what does this entire unprecedented collapse for Yes Bank actually mean. We have Raghav, Garg, institutional desk Nirmal joining in. Raghav, overall, let's discuss three things about Yes Bank today. Number one, the kind of fund infusion that is expected to come in. We already knew about SBI, but a lot of other private players that have joined hands. Number two, the kind of reconstruction scheme that we're looking at. And three, Q3 earnings. Now, first to start off with, apart from SBI, a lot of other private banks that are expected to come in now, the names have been revealed. 10,000 crores is the kind of infusion we are looking at. What would this actually mean, and does this actually give you any confidence taking the private players' names as well?
Yes, of course. There's SBI that's putting in about 6,000 crores. There's ICICI, HDFC Limited. There's Kotak, Federal Bank, Bandhan, and IDFC Bank together putting in about 10,000 crores, including SBI. So from a shareholder point of view, it does provide comfort that there is capital coming into the bank, which should be able to address the provisioning needs as well as growth going forward. But having said that, I think the quantum of provisioning that we're looking at in FY21, given that they're still expecting about 5% slippages, that we estimate that provisioning about to be about 7,000 crores, and then to that extent they would need at least another 6,500 to 7,000 crores, and then maybe some more to address the growth aspect over the next 1.5-2 years.
Right. So we are trying to say that this amount of 10,000 odd crores that will be coming in is actually not going to be enough for the bank.
Yes, not at all. So we would need an amount equal to about 8-10,000 crores more going forward, maybe next year, or to address our provisioning and growth requirements.
Right. Moving away from there, you have the reconstruction scheme that has come in, and one important point that everyone right now is highlighting is the lock-in for the 75% of the shareholding for the next 3 years. What does this actually mean for the retail investors as well as institutional investors? Do you think what happens is that people will be scared to actually put in money because what's available for trading goes down?
The implication of this is that the tradable volume will come down quite significantly, and whoever the existing shareholders were, as of yesterday, and the new investors that are coming in under the reconstruction scheme, they'll be allowed to, they will by requirement have to retain their shareholding at 75% over the next 3 years. So consequently that reduces the tradable volume, as I said, and of course the float that's tradable. So I'm not sure if they'll be scared or not, but yes, since the volume will come down, I think the stock price movement could be quite volatile, and I don't see as such that many institutions, or rather any institution, would be interested in participating, because, as I said, there's not a lot of float out there that's available.
Right. And overall, Raghav, in terms of Q3 earnings as well, the quantum of loss that has been posted, that's immense. Now, there is a collapse on the P&L front as well. If you talk about NPAs, you talk about slippages, I don't think so anything that is spared for a Yes Bank right now. Taking Q3 earnings into perspective, what's the overall outlook do you have for FY, probably 21 as a whole? What are numbers indicating?
So, see, just to run through the Q3 result, they had a loss of 18,500 crores, on back of provisioning that was close to about 25,000 crores. Which was a result of the NPA formation that was there. So their NPAs increased to almost 19% in a matter of 3 months. And they're also expecting about 5% slippages going forward in FY21. So if you take all of that into account, you directionally, you can sense that the NPA levels will continue to be quite high. And given that there will be a lot of pressure on the net interest margins, so in a way your NII would continue to be weak over the next year or two. And then your the net interest, the non-interest revenue line item has also collapsed quite considerably, of course, because the corporate book has run off quite significantly. Taking all of that into account, and then looking at the provisioning estimate, we're estimating about 7,000 crores of provisioning
Correct.
going into FY21. So taking all of that into account, we do think that bottom line profitability will continue to be under pressure, and we don't see well, there of course there would be some growth on the retail front. It was 11%, the book was up 11% YOY in Q3, but since we expect that and that is the strategy of the bank as well, to sell down the corporate loans, so taking that into account, the growth will be challenging to come by in next year or two.
Right.
So, yeah.
Thanks, Raghav, for getting us the details. So that's the unprecedented collapse that we have been talking about, where Raghav is also indicating that FY21 will be another challenging year for the bank, and clearly the asset quality has deteriorated further. Corporate book is expected to shrink going further, and hence the rating on Yes Bank continues to remain under review. That's all that we have on Yes Bank. Thanks for watching. In fact, for more updates, you could subscribe to our YouTube channel and follow us on Instagram, Facebook, Twitter. Thanks.